Let's welcome in our next guest, Parag Thakkar, Head of Institutional Sales, HDFC Securities. Parag, good morning. What's the sense that you get as far as markets are concerned going into the earnings? Do you believe that markets overall are now fairly priced?
Yeah, because it's a panic buying caused by excess liquidity. Because globally, everybody was prepared for Brexit event in a way that everybody overbought into safe havens like gold and bonds. And now the investors globally are realizing that the event was not such big, and so people are switching money from that safe haven to equities. And US job data, I think, triggered this move.
Right. So overall, we were just looking at the volumes of Dow Jones and overall the way markets are going up globally. Volumes are not particularly that great. Is that something that you would be concerned about? Even here in India, volumes are just decent. They are not particularly, quite good that you would say that, there is buying, it will lead to follow-up buying.
Yeah, because the point is that a rational investor will feel that, valuations are stretched. And that too in a very short term, in just 1 month, everything is looking very expensive also compared to on-ground earnings. So that will be, so I would not focus so much on volumes because I'm not a technical guy. I would focus on earnings, and definitely things are not as colorful as it looks on screen. So of course, monsoon is good. There is a hope that GST will pass through. But for example, I always say this, that everybody knows that in order to play the entire India story, you can be bullish on Asian Paints and Ultratech kind of stocks. But the only problem is valuations. So I would at least look for a good correction to buy into these secular names rather than buying at current prices.
Right. As far as macro data is concerned, CPI, inflation, or the other macro data that we are getting here in India, that is at least showing an uptick.
So basically, for example, see oil demand for India, I think it was at all-time high in this quarter. It was up by 7.8% YOY. So all these are very good indicators, I would say. And plus monsoon is now above normal. So things are picking up, no doubt. From January, February, March quarter, things are picking up on ground. But I would say that most of that is captured in the current prices. Right. So the problem is excess liquidity is driving high quality stocks to a levels where a value investor will find it very difficult to buy.
Right. A value investor may actually find it very difficult to buy. So how should you approach this market? How should you, try and look into this market? Should you use this panic buying, the term that you used, as an opportunity to go ahead and book profits, try to liquidate, try to reduce your exposure to equity?
I would not say that because generally people are underinvested still. And generally it becomes euphoria, everybody gets absorbed into the rally, and then there is a big fall. So I would say that is a little bit far away because still investors are not fully invested into equities. So I would not subscribe to that view, but buying something which is very expensive and very little left on the table and very little margin of safety, I would not advise that. If you have, you can hold on and ride the rally. And look out for values and structural themes emerging out of, for example, some of the sectors, for example, steel has not done that well since last so many years. Now, if you see April, May, June quarter results, I think some of the companies like JSW Steel will report excellent earnings. Or for that matter, multiplex as a theme. Of course, last 2 months at PVR saw a very good move. But as a theme, multiplex theme will play out over next 2 to 3 years, I feel. As the movie pipeline gets better, competition is just not there because 4 companies control 80% of the multiplex market. Single screen is out of business. And food and beverage business within that business is a 70% gross margin business.
And that's growing well.
And that's there is no other alternate to family entertainment except movies. So, and plus movie pipeline is very good. For example, if you just see July, August, September, the movie pipeline looks absolutely great. So I feel that short term is good, and plus companies like INOX, you have operating cash flow yield of 7%, which is a good starting point for a value investor also.
Right. Just talking about the multiplex theme, do you also believe that they will benefit a lot as far as English movies and the success of English movies are concerned?
Yeah,
because something like a PVR, I remember talking to them after Jurassic Park, which got released a few months back. That they were quite happy by the success of Jurassic Park here in India.
Yeah, definitely. So that is also emerging trend. And see, India has the highest demographic advantage, and this is one of the sector which will gain out of it, right? 47% of Indian people are youth, and they would like to see, good quality movies with a good experience. So I think this story has a long way to go. And most importantly, see, in other sectors, what we see is that as the industry size expands, the number of players keep coming, and it spoils the party at the end of the day. But here, it is too difficult to get a scale like PVR or INOX in short term, even if new players come in. And right now, 4 players control 80% of the market. INOX, for example, has 23% market share. PVR has the largest market share. So I think it's a good consolidated industry, and the growth is clearly visible.
Right. We had seen a lot of consolidation into this industry. Do you expect that consolidation would continue, or now you believe that time has come when they would start to focus on their ROE, how do they grow going ahead with the existing infrastructure?
So no. So in my view, they'll always look at for value accretive acquisitions, and that is the way it should be. Because see, if you see INOX, they generate around 150 crore operating cash flow after paying interest and working capital. Of course, there is no working capital thing because there is no inventory and very low debtors. So they would definitely like to expand, because see, in tier 2, tier 3 towns also people want this kind of experience. Of course, at a lower ticket rates, and there the rentals are also lower. So right. They would look to expand, and there is no problem. It's a growing business. I think one should not look at free cash flows. One should look at operating cash flows. And depreciation number is huge in these companies.
Right. If we look at something like a Power Grid, which you have recommended earlier, or probably a Coal India. Does that continue to still be the theme? They have done well from when you had recommended. It's not a company which can give you 100% sort of a return, right. But Power Grid, NTPC, Coal India, I remember talking to you, and except a Coal India, both the other companies have given a good return. But you would still be positive?
Yes. Utilities, I continue to be positive, because see, the predictability of earnings in NTPC and Power Grid is unmatched. They have got fixed ROEs, and plus, the capex commissioning part of Power Grid, which was 30,000 crore last year, is also going to be 30,000 crore this year. So it seems that, and plus wind and solar gaining a lot of traction, which will again require grid strengthening. So the growth story still continues for Power Grid. Of course, as you rightly said, this cannot be multi-baggers, but these are good portfolio protecting kind of stocks in a market which is going too high.
Right. If we just look at what's happening in some of these names like BHEL, L&T of late. Are you excited by the numbers that they are giving? BHEL got an order of about 10,000 crores overnight, and just look at the move. It's back to 145 levels. Nobody would have imagined it. Is that a play that you would want to do? Maybe not directly linked to utility, but definitely within that sector?
So I would not like to participate, but I would say that, I would like to accept that that doesn't fall into my circle of competence. I am not saying that one should not buy BHEL or L&T at this levels, but I am not too excited about this.
Right.
I would go with NTPC Power Grid in the power space with very much more comfort.
Mr. Thakkar, good morning. This is Anindya from the Delhi studio. Let me start by asking you a little about pharma. I was reading one of your past interviews, and you said that you're very bullish, and you said buy on dips. Now let's take something like Cadila, which you've been bullish on, and with this new drug, Asacol HD, that they're going to be launched. And there are a wide range of estimates made as to the size of that market, from $320 million to another which is $180 million. You see a thing which says that by 2022, when it goes off patent, that size will drop to close to $50 million. Now, how does an average viewer get a sense of how to invest in a company like this, which is betting a lot on this kind of a drug?
So this is my investment philosophy, that something which is good, that it is good, but it is volatile. So for example, Tata Motors, I'm talking out of pharma but something like ITC, where the news flows keeps on coming about states levying more and more taxes and all, or in pharma where US FDA issues are there or product specific issues are there. So this kind of stocks one should buy when there is a panic on the street. So the interview which you are referring to, when Lupin was around 1460, 1480, or Cipla was around 460, 480 kind of thing. So when there is a general panic, you should buy these high quality companies. That is my view.
So 19 times right now, let's say something like Cadilla, which is trading at about 19 times FY18 earnings, is too expensive?
Yeah, so Cadilla also, it's a good company. Again, of course, there will be volatility in earnings, and in pharma, which are US, where US business is very big, this is likely to be the case. So I would not, because it has also rallied from 315, 320 levels to current levels. So I would definitely interested if it goes on this news, if it goes down to below 340, 345 levels. So, I would like to be.
Sorry, go ahead. You were saying.
So I would like to, as I said, my view on this companies is good, and at between say 14 to 18 times earnings on FY18 basis, I would like to buy these stocks.
Okay, let me take one which is relatively cheaper compared to the rest of the pharma companies, and that is Aurobindo Pharma. If I look at it, Aurobindo on a consolidated basis, FY18 earnings is about what, 15 times. Today probably 15 times. Would that be one pharma company to get into, or should that correct even more, go down to about 13 times and then you would get into it?
No, so Aurobindo continues to get a huge number of approvals, and their all plants are US approved. There are no particular issues regarding to US FDA also. So that continues to be a buy on dip strategy. But suppose if they acquire some large portfolio of a company like Teva or something, then one needs to look at how value accretive it is. But just to clarify that Lupin remains the top pick within the pharma pack from my side, and I started recommending it from 1460, 1470 levels, and I continue to like it because there I have maximum comfort with management in terms of I am hopeful that all the US FDA issues will be resolved, and that US acquisition, Gavin, there are very negligible revenues out of that up till now, and now that will start from next year with a very good, very high EBITDA margins.
So even at 1680, Lupin is a buy for you?
Yeah.
All right, we better tell our viewers that Lupin, buy from Parag Thakkar. I'm told that one of your picks is JSW Steel. Now when I look at JSW Steel, one of the things that bothers me is the interest coverage ratio. Now I don't know how it has changed because one doesn't get that data, latest data, but for the past fiscal, it's, I think, still less than 1, which is a little concerning.
So I would like to say that, see, I am not recommending JSW Steel at current prices. I am saying that from the earning season perspective, this company will report massive turnaround because last year steel prices were low. In Q4, they had some shutdowns, so their plant was not operating at an optimal level. In Q4, they have increased their capacity from 14 million to 18 million tons. So this quarter, their production will be, sales will be around 3.9 million tons. And if they make 7,000 rupees a ton EBITDA, it will be 2,800 crore EBITDA this quarter. And this year, we can expect anything about 10,000 crore EBITDA. So if this MIP stays, this company is the biggest beneficiary. And we have been recommending this from very lower levels. At this price, I am not recommending fresh addition into the stock. But if one has it, you can hold on to it, depending upon the price movement at the time of the result.
If I look at the debt, even after this great performance and retiring some of it, paying back interest, it will still be left with about approximately 38,000 crores, right?
Correct. So our market cap is 37,000 crore. Debt is around, net debt is around 39,000 crore. So EV is 75,000 crore. And there is an expectation that it can do EBITDA of 11,000 crores. So it is trading at around 7 times EV EBITDA. So in my view, yes, I completely agree that in a cyclical business like this, this debt is too high. But company's performance will improve significantly, so that will be so that will take care of the
upside from the current price. Okay, you know, there is a view that don't buy steel companies. Buy, if you can, then invest in commodities. Are you one of the votaries of such a view?
No, so I would like to say that commodity companies definitely I will be also very cautious because the demand outlook globally is not that great. So I would be very cautious in companies which are very highly leveraged. JSW Steel just happens to be a converter. So if there is a global recession, iron ore prices are also going to go down, pet coke prices are also going to go down, and steel price will also go down. Their delta is in the spreads. It's a converter, right? So it's a different kind of a commodity play. But if we come to miners, Hindustan Zinc, of course, remains a great company because it has very low cost of production of zinc. It is the cheapest cost producer in the world. And zinc prices and zinc, you don't have too much of supply coming in globally. So in February, zinc fell because of the Chinese concerns, and now zinc is making new highs every day. So it remains a good company on dips. But of course, this is my view for the entire market, that right now market is going up due to panic buying because there is too much of liquidity, $11 trillion lying at lower negative bond yields. So that is going to come off. That is going to spill over to equities. So there is going to be a panic buying, and which is happening in the market. So you will not get good valuations or good value buys at this point of time.
But you know, the worry is that maybe this is the way the world is going to be from now.
Yeah. So this is a good part of it, that whenever we take it for granted, it surprises you. So I feel that once everybody gets absorbed into this rally and everybody starts believing that there was nothing like Brexit, there is nothing like Chinese debt issue, that is the time it will start showing up its impact on the markets.
I'm going to ask you whether you cover some of these things which have got beaten down and now has tried to start to look at some business. Like we've got news on Great Eastern Shipping, for instance, that they've bought a new tanker which will expand their amount of capacity. Comes pretty cheap if you look at the market and just don't look at anything and do a relative valuation of all the NSE 500 stocks. Great Eastern Shipping is one of the cheapest that you'll get at about 6 times FY18. Do you track it? Is it something that's worth even looking at?
No, so we don't cover shipping as a sector, but just to say that this is a great company in the shipping sector. Very good promoters, and most importantly, very good balance sheet and cash flows. So it's a good company to back in a good shipping cycle, and which may start from the bottom. Because in the entire world is doing stimulus, still growth is not there. So that is something to worry about. Let us see how it goes about. But within the shipping sector, I think it is the best stock to own.
All right. Let me ask you about auto sector. Now, the May numbers that we got, the June numbers that we got, weren't the greatest that one could have got, right? Maruti, I understand that there was a strike in one of the suppliers and things like that happened, but it definitely goes below its strike rate. Most of the companies that we saw, except for the three-wheeler ones and some which have rural exposure, actually didn't do well from the urban demand part. And there's been talk that maybe the fifth pay, the seventh pay commission, arrears and all that will make a change. And now we know that some of those allowances will not be paid. Have they run up too much? Are they too expensive?
Yeah, so auto, for example, Mahindra & Mahindra is a stock which I clearly like because 65 to 70% of the business is rural-led. And apart from good monsoon, we are seeing a lot of government spending in rural India. And MSP prices are also likely to inch up because there are elections. And Mahindra & Mahindra in this quarter has shown 21% growth in tractor volumes, and they have now gained around 43.8% market share. So I think Mahindra remains a good rural play within the auto pack, and I would like to be bullish on Mahindra & Mahindra even at these prices.
Okay, I'm going to come to other rural plays, but before that, you mentioned elections. Would you sell sugar? Anything which is in UP?
So sugar, I was on your show and I was very bullish at very lower levels. So I would not like to be bullish at these prices because these are typical cyclical commodities. You have to buy when there is a problem in the sector, and you have to sell when everybody is enjoying.
So it's time to sell. That's what I'm asking. Would you sell especially the ones which are exposed to a UP election scenario where suddenly you'll see cane farmers being given huge amounts of prices?
Yeah, so I would like to, I would like to recommend profit booking.
Okay, that is interesting. Would you name a few sugar companies which you would say is worth booking your profits in?
No, so basically, I was bullish on only few, BALRAM, CHINI and AID Perry.
All right. And you would say
so I would like to say that BALRAM, CHINI, you can book profits if you want.
All right, great. Let's put that out then, that BALRAM, CHINI is a sell for Parag Thakkar. Pankaj has a few questions, but one final question from me, Parag, is about the rural play. You mentioned that Mahindra, because of the rural exposure, you would still buy at these levels. Anything else that you think is worth looking at from the rural perspective?
Yeah, so basically, that is the point, that any irrigation play like Finolex or EPC Industries, will do well, no doubt. Agrochemicals should do well. So EPC also I had recommended low level. So I would say that you should hold on to it because the story has just started for that company. Mahindra & Mahindra is a one clear large cap buy. Agrochemicals, we have been bullish on Dhanuka, PI Industries. So that are good ways to play rural cycle.
Parag, I just wanted to ask about LIC Housing Finance. That's a name which you like. And, among the housing finance, if you would just pull up the last 18 months returns, it's one name which has underperformed. Because it has underperformed, you like, or is there any other trigger?
It's a clear secular play. It's a beneficiary of 7th pay commission also. And it is available at very attractive valuation, 9 to 10 times FY18 is and earning growth of 15 to 18%. So it's not a high flyer like a microfinance company which will grow at 50-60%. But it is a safe company growing at 15-18%, available at 9-10 times in terms of PE multiple.
Right. The point that you made about liquidity, which will of course lead to rates getting lower, not only abroad but even here in India, maybe the extent is lower. Is this a beneficiary of that as well in a big way?
No, because in housing finance they tend to pass on. So
the benefit that they would get, they would pass on.
So a vehicle finance company like Chola or Sundaram Finance or Shriram Transport will have more advantage in the falling interest rate scenario because generally they land on a 3-year basis, which is a fixed rate lending. So when banks reduce base rates, their margins go up. It is not the same case with LIC Housing Finance because housing finance is a floating loan.
Right, but overall you're bullish on housing finance and within that LIC.
Yeah, it's a good secular story, I would say. And it's something where valuations have not run up so much.
Right, something where valuations are comfortable and sector continues to do well. Okay, the point that you made about microfinance companies, 40% plus growth, 50% plus growth, do you think it's now getting factored? We've had 2 listings in the microfinance space. Some of the other smaller companies which were listed earlier, not discovered, have run up quite a bit. Do you think you're getting signs that valuations over there are now reaching to a level where returns may be very, very back-ended?
Yes. Completely agree with that.
Right, and how would you play a SKS Microfinance or a Equitas or something like that? How would you look at it, or just you would avoid them at these prices?
At these prices, I will avoid.
Right, Parag. Thank you so much for joining us this morning. Hope to see you again.
Thanks.